Okay, traders. Sorry for that. We had a simple. We had a technical issue. We had a technical issue, but it has been fixed, guys. So let me repeat for you guys one more time. So we always divide our analysis into three ways. Okay. So number one, we always do the technical analysis, and also we always do the fundamental analysis. Third one, we just do the talk. Okay. So I told you our main focus is going to be on CPI year by year. Okay, why? This is a CPI ending the year, and also it's going to give us the long-term view of the inflation of the US dollar. So we are going to first focus. Let's first break down the core CPI month per month. The core CPI month per month, we are seeing on three. We are seeing that the previous performance from July it was performing poorly. The dollar was performing poorly. Then August, we came to see a stable expectation. The forecast was 0.2 and it came as it was forecasted. Then September, we had a positive. So it shows that the dollar has been performing well. And also, it was forecasted to stay stable the previous month and it stayed stable exactly as it was predicted. Now we can go to CPI month per month. There is a difference between the core CPI and the general CPI, just normal CPI. So when we come on the CPI month per month, M per M, yeah, so we are seeing the previous from July, August, September, October, November. We are seeing that from July up to today, it has almost been stable for the dollar. Leave alone July when it was negative, and also we had positive, but it came as expected, but it was an increment from from negative 0.1 positive 0.2. It was an increment, which was a sign that the dollar was doing well. Also, we are seeing another sign of the dollar doing well on 0.2. Forecast of 0.2 in September. Then we had a positive because in September, the forecast of October, they expected a decline in the data of month per month of CPI of 0.1, but it came out as 0.2, which was a positive and very good for the dollar. And then in November, we saw 0.2 coming out as it was forecasted, which was positive for that dollar. It was forecasted to be positive. So today they expect more increment. The forecast, we are seeing the forecast of 0.3%. So more increment is being what is being expected. So it's also like the majority, because forecast is always the majority. So the majority also expects the dollar to stay what? To stay strong. And then we have the USD year per year. So you see July, August, September, October, and November. We are seeing that in July and August, the performance was bad for the dollar. It was very, very bad. It was the difference from the forecast of August. It was 3.0%. That was the forecast of 3.0%, but which came was 2.9. So an increment of 0.1 was there. So it wasn't expected. Then the forecast for the next month of September, it was 2.5. And you see, so if you look at the fundamentals all in general, because I want to summarize, guys. So if you see all the fundamentals in general, this is a sign. This is a sign that the dollar is expected to be more strong. Okay, we expect the dollar to be more strong. If I go to technical analysis, why I expect also the dollar, maybe the dollar it has a possibility of being strong. This is simply because we have the president-elect Donald Trump coming in January. So you remember when they were making the elections, whenever Donald Trump was winning a different state, and see gold selling like hell. So which was a good positive. It was positive for the what? For the dollar. Now, so that's the fundamental, what I think and what the Forex Factory has for us. Forex Factory in general is indicating that we are expecting a positive dollar, positive data for the dollar. So that's a good, that's being bullish on all USD. So we can go to some bit of technical. I have 15 minutes to do some breakdown for you. So I'll just use these minutes to first look on the DXY in chart. So this is the US dollar chart on a daily time frame. Okay, so they respected these points here. You see, this point here was respected, and also we are expecting them at least if they are to buy to reach this point. Okay, that's the dollar. Let's go and straight in for the 4 hour to get a clear analysis for the 4 hour. So clear analysis for the 4 hour. We have this zone here. You can also mark this zone here to mark as our entry point for the buyers. To make it more clear, let me stop on 30 minutes. Let me draw a zone for you guys on 30 minutes. So this is the setup. If I'm to buy the dollar today, this is the zone I will be looking at. Okay, I'll be looking to buy from this zone here. So this is what my focus will be on. This is the turning point. Then also another zone will be this one if I'm to buy. Okay, those are the two zones I'm focusing on if I'm to make it sit from this point here. So if I'm to buy, those are the zones I can mark it. I can put also this dotted line here in case the market tends to just respect that space there. So now if you are to sell WCK, where would you sell that dollar from? So I'll be focusing on these 4 points here. The first zone I'll be focusing on will be here, this one here. That's entry number 1 where my focus will be. Then entry number 2, if I'm to sell, I'll be focusing on this zone. So the last one is just the highest peak, which I want us to go under. Yeah, so this is the dollar we have. So there is a possibility of that dollar to buy exactly from that point. There is a very big possibility for that dollar to buy exactly from this point where it is. Why? I have a feeling they respected this I have a feeling they respected this zone. So that's why I think there is a possibility for them to buy exactly on this on this zone. You get, there is a possibility, but if they don't buy from that point, they can buy from here. So that's if you happen to see a spike. But if you're not going to see any spike, we are more likely to respect the Forex Factory being bullish on the on the US dollar. So we are more likely to be bullish on the US dollar. So that's the simple setup I can give you guys there. Okay, now let's do some setup let's do a setup for USD JPY. Let's do some setup for USD JPY and we see what we should expect. So this is our USD JPY setup. I want us to be short term. So let me first focus on let me break down from here. Okay, so this is the daily chart. So we have area for strong buyers, it's just there, and area for strong sellers is here, and also we can mark this as an area for strong, another area for strong strong sellers. Okay, so this being our another area for strong sellers. So we have one strong area for strong buyers, 2 strong areas for strong sellers. That's on a daily time frame. So let me zoom into 4 hour. So this is our 4 hour time frame. Okay, 4 hour time frame. This area here is not so much clear, so I'm not going to tamper that zone. Let me see this body. This is also in a good position, and also the selling one is in a good position. So let's just go straight to our 30 minute to see our entry. See if we can get an entry for both buyers and sellers. So this is our this is how USD JPY looks like on 30 minute. So what we shall do, let's give our zone to this point here. Okay, this is going to be the point. possible sellers. Okay, possible buyers, I can just say, I'll give my possible buyers the first zone will be here. As if we are to buy, we can try to buy from this point. That's point number 1. Also, point number 2, we can have this. That's our other end area buyers. So if they don't buy from this zone, I'm expecting them to buy from this what? This zone here. So that's the USD. But what about the sellers? So let's say these are the sellers. So sellers can first give them this zone here. We shall give them this as our area for possible sellers. Okay, that's our first zone for possible sellers. Zooming in here, can mark this on the entire because it was respected. So in short, this is the setup we have. Okay, this is the setup we have for the USD JPY. So there is a possibility of the market. Let me try to mark it for you guys. If we are to buy, the market can tap here and then we buy. But if they tap here, we can buy up to this zone, then we sell. Then this one will give us the overall buy up to this point here. Okay, that's scenario number 1. Okay, so why is this scenario? So if they happen to buy, let's say data comes out when it is positive, they can actually, let me say data comes out when year per year is positive and month per month is negative. Okay, so meaning the data will not align well. Adding on the core CPI, also having different data. So if the data is different, we can see we can hope for a spike tapping this area, then they buy to this area, then they sell. That's a short term, and then they buy long term. That's scenario number 1. Data comes out when it is not aligned. What do I mean when data is not aligned? Let's say core CPI. Let's say core CPI comes out positive or comes out as forecasted. That means the dollar is stable, and the CPI month per month comes out, let's say, positive. Okay, and then the CPI year per year comes out negative. So meaning that data has not aligned well. Okay, so since that data has not aligned well, it means we are going to have spikes. So if we have a spike, the spike can either jump from this zone here, then it touches this, it sells, then we buy long term. Okay, that's scenario number 1. So scenario number 2, when the data comes out aligned. Okay, what do I mean that the data comes out aligned? It means when we happen to see core CPI, let me show you what I'm trying to say here. So if you happen to see core CPI month per month, okay, if you happen to see it coming out 0.3%, that's, let's say it is forecasted, or if it happens to be positive, higher than the forecasted data, then we happen to see with CPI month per month, this one here, also positive. Okay, let's say it comes out 0.3%. That has forecasted, but positive for positive than the previous data, which was 0.2%. Let me help you guys. I know when it comes to this data, many people get lost because most of the traders in Uganda, most of their focus has always been on the technical part, but fundamentals are also so crucial, and you have to go and learn more about it. What do I mean when I set month per month or M per M? When you see M stroke M, what does it mean? So if this data of month per month comes out as forecasted, it will be good for the dollar, but the impact will not be so strong. Okay, but if it comes, why do I say the impact will not be so? I will not be so strong. But mark this: if CPI month per month, it is forecasted to be 3.3%, but the previous was 0.2%. So meaning it is going to be positive, yes. but it is going to be exactly as forecasted. So meaning people already knew what is going to happen. So the impact is not going to be there. Okay, that's month per month if the data comes out as expected or as forecasted. CPI, okay, previous was 2.6. So they expect an increment of 2.0. Today I was reading some article on Boomerang, okay, and also the Wall Street Journal. I was reading some article. They were as it is forecasted here. They were expecting a very big change of 2.7. The previous was 2.6. So if you see 2.7, it will come out as forecasted, but trust me, the impact will not be so strong. Okay, but it will be still bullish USD. Dollar will still be bullish. Okay, that's if the data comes out and when the data comes out aligned. Okay, so if the data comes out aligned, in that scenario, that's the scenario number 2. If data comes out aligned, so let's say it is all positive, it is all green, we might not see these spikes of touching this here or what. We can just see a bullish move touching this, then we proceed with buys. Okay, that's scenario number 2. Scenario number 1, when the data is not aligned, we are more likely to see a spike touching any of these zones, then we shall see buys. If the spike comes, that's in the other first scenario. If the spike is so strong and it touches this point, okay, then this is when it will be weak and they will just pass through it and touch it as a retracement and they buy. That's it, scenario number 1, scenario number 2. But scenario number 1, if the data comes out all positive, we are just going to see a very big bullish a very big bullish move. So we have 3 minutes remaining. We have 3 minutes remaining to see how the data will come out. But I would like to advise you guys, if you really have your money and you have struggled hard to get this money, I would advise you to stay out of this CPI. This is a tricky CPI. This CPI ends the year. Okay, so expect it to be strong. Whatever we have made analysis here, it cannot. They might not respect it because of this year-per-year data, which is expected to be 2.7. That's already bullish for what? Dollar. So also those who are willing to trade the gold, I would advise you to stay away from gold because we have card fundamentals. Card fundamentals always have impact. Card fundamentals always have impact. I repeat, card fundamentals always have impact on the gold. But if card fundamentals have impact on gold, then also we have USD. So all those are different fundamentals occurring on one pair. That pair would be a bit dangerous to be trading it now. So let's wait and see how the market comes in. So let me hope you have memorized all the scenarios. So all our main points here, for example, if you want to trade today's CPI, just wait for the fundamentals to come out and see how it reacts. So in 50 seconds from now, we shall be seeing the impacts coming in. 50 seconds from now, we shall be seeing impacts coming in, guys. Okay. Now 30 seconds, that's half a minute. Yeah, so let's wait and see. Those who want to trade, I would advise you to trade after impact, after seeing what the data has for us here. Okay, so we have 20 seconds. Yes, we have now 13 seconds. Okay, data is out. Still pending to see. Data is out. Yes, so the data is aligned. The data is aligned as forecasted. Okay, so since the data is aligned as forecasted, you see, you look at as forecasted, nothing has changed. It is not positive, it is not negative. So that's DXY. You see how the market has reacted on DXY, and that's USDJPY. Okay, so as I told you guys, I repeat, let me repeat this for you once. I told you once data comes out as forecasted. Look at CPI month per month. Previous was 0.2. Today is 0.3. Yes, there is a change in the dollar. Okay, there is a change in the dollar. So since there is a change in the dollar, it means that dollar is bullish. Okay, but the impact is not going to be so strong because the market has came out as everyone knew. It's like we all knew what is going to do what is going to happen. That's why I told that we don't expect this CPI to be so strong. So that's the results we have there. So data has came out bullish for the dollar, but has forecasted. That's why you don't see green or red on this on this data. You get, guys? That's why you don't see green or red on this on this data, because it has came out as expected. Okay, now it is the same which has happened to the same, exactly as the article was released today in the Wall Street Journal. It was 2.7. It has came out as forecasted. So this gives you the reason why you have been seeing a gold sales and buys early morning, why you saw the USDJPY bulls, why you saw the dollar bulls. It's because the data was already coming out as forecasted. People already knew what was already doing, what was already happening. So you have to remain positive. You have to remain bullish for the dollar, as you have seen our setup. As our setup, it has been what? As our setup has been respected. Okay. But so to confirm our bulls, yes, the bulls have came out as expected. But to confirm our bulls, okay, to confirm our bulls is, if you don't want to miss out, I know many of you don't want to miss out on trades. If you don't want to miss out on a trade, okay, and you are afraid to miss out on a trade, to confirm your buys, it should be after they break this zone. After breaking this zone, you can confirm your buys. But so far so good, setup has been respected. Data is bullish. I repeat, data is bullish. So what can happen before I leave you guys, before I say goodbye to you guys? What is the next scenario? What can happen in such a scenario? I have seen inboxes. Yeah, WCK, before you leave, break us down. What scenario can happen? So this is a scenario which can happen. We have two options. Okay, so whether they have respected this buy zone, so they can touch here, they touch this zone, and they buy. Why do I say this? Because this CPI is weak. This CPI has not been so positive. It has not been so strong. So that's scenario number one. Scenario number two, they can just continue with their small sales. Okay. Scenario number two, they can continue with their sales. Tap this zone, buy here, tap here. So all scenarios are pushing us into what? Buy. So it has been positive for us. Setup has been respected, and as I told you guys, I didn't expect it to, according to the data. I told you if this data comes out when it is aligned, as you see, all the data has been as forecasted. No green or red data. So such scenario, it shows that fundamental, that CPI has been what? Has been weak. But being weak doesn't mean that dollar is weak. I repeat, if you are trading today, all you should be doing, you should be looking for buys on USD. You should be bullish on USD because it is bullish. Okay, it is bullish. You see our setup, the DXY setup, it has been what? It has been respected. Our DXY setup has been what? Has been respected. But it also has scenarios. The strong setup is here. Once they push and they buy from this point, then they will break through this area. If they buy where they are right now, then they're not going to buy beyond this area. They'll have to do a retracement from this area. So everything has gone as we predicted. So WCK, what would you advise if I'm trading gold? Yeah, I keep on getting those messages right now here in my inbox. So before I go, let me tell you this about gold. So look at these fundamentals. We had card fundamentals. We have card fundamentals. They are going to be there at 5. So these are the fundamentals which are going to be crucial for the what? For the for gold, specifically on gold. If you want to trade gold, wait for these fundamentals at 545. Those are the fundamentals which will be so strong. But right now, if I was to trade right now gold, I'll be looking for sales. Why do I look for sales? The dollar, I'm bullish on the dollar. The dollar is so strong, so strong. It has came out as forecasted. When data comes out as forecasted, it's like people already knew what the data is going to be. Okay, but it doesn't. It only decreases the volatility, the speed of the market, but it doesn't take away the direction of the what? The market. So the direction of the market, it's bullish. So that's the last question I have answered by inbox. Unless any of you guys can inbox me with any other question, right now I'm stopping here. Everything has gone as predicted. Everything has gone as predicted. So allow me to stop here, guys, as we celebrate our successful CPI of this year. Also, before I leave, guys, thank you so much for supporting Tamam Brokerage Service. Thank you so much for being with us and attending these lessons every time we organize them. And also we keep this data. You can go and check out how we have been doing the previous CPIs, how we have been doing the previous NF, how our lessons have been going, how our analysis has always been going. Tamam Brokerage Service is our YouTube channel handle. You can go and search all that data is there. If you want to know about your trader, the Deutsche, how can I say, traders shared stories of their life in trading. Those stories are there. You can go and read about it. So guys, I really appreciate. Also, before I leave, I appreciate you guys for being part of WCK Markets, always being there. I appreciate you guys. This year has been good with you guys. You have made things possible for us, and I also hope you have also gained a lot from the lessons I always do hold. So allow me to stop here, guys, and I appreciate your attendance so much. Have a, should I say, Happy New Year? Yeah, Happy New Year. I think I'll be here in the next NFP or CPI, and that will be January, inshallah. So have a good day, guys, and thanks for attending our CPI.